Hey, welcome investors to the 40 Finance channel. Today we're going to look at 5 growth stocks that have essentially tanked this year, gone down quite a bit, and we're just going to ask the question, do we see any value? I'm just going to share my opinion if these are good buy low candidates. So 5 growth stocks to potentially buy low or perhaps even wait for them to go lower before you add them to your portfolio. All right, first on our board is Peloton. And I think Peloton to me is a little intriguing right now, mostly because we're heading into the Christmas season. And I can imagine that that would likely be one of their best quarters of the year. But from a year-to-date perspective, Peloton is down 44.79%. And let's take a look at what analysts are projecting for Peloton. So this company was not making money when it first started, like so many growth stocks and IPOs do. But the pandemic has pushed them towards profitability. You see a, whatever that is, 4,000% increase in EPS. Next year, or fiscal year 2023, they get pretty close to flat with an 88% growth. And then in the out years, you start to see some of that profitability come through. On the revenue side, they're still growing pretty healthy. This fiscal year, you're going to be up 33%. And then next year, if we assume like maybe a world that's coming back to normal, still got 29% revenue growth projected, and then 25% still the year after that. All right, let's take a look at TipRanks, see what the best performing analysts think about Peloton. And we haven't had a lot of updates. You can see most of them came in last month. We do have a couple 18 days ago and 3 days ago. And I would say generally speaking, outside of these two analysts, you do have some buy ratings all over $100. The most recent coming in at $120, which is a 35% upside. So from an analyst perspective, I say that their mind is going closer to where my mind goes with this one, is that it's got beaten up, but if you were ever interested in it, you know, getting it before Q4 seems to make a lot of sense with gift giving coming up. All right, next up is FSLY. This one down 54% for the year. FSLY is a content delivery network. Basically, that helps very large websites deliver their content to several different places across the globe so that it can be consumed faster over the internet by their end users. And they've had some hiccups. They had a very big growth story during the pandemic in 2020. A lot of people speculating that they would grow at a massive, massive scale. And then they kind of tripped over some of their own projections, and then they had a couple outages. So FSLY has taken a beating, to say the least, this year. All right, looking at earnings and revenue, this is another one that's not going to be profitable right away. Projection right now, at best, is December of 2024. And they even set themselves back a little bit at minus 200%. On their EPS growth projection. So this is the type of thing that's really going to drag a stock down. And the question is, you know, can they turn it around? What can they add to their service offering, perhaps to build revenue at a stronger pace? We go down to sales, and it doesn't look too bad. This isn't the biggest company in the world at $345 million. You got maybe 19% growth year over year for FSLY. Next year, inching towards 20%, and about the same in 2023. So let's just call it a 20% average. It would take all the way to December of 2023 to hit the under 10 on a forward price to sales basis. So with that, I would say it's cheaper than some of the other higher growth tech stocks, but I think you still want to have a catalyst or some sort of bull case mapped out in your mind of how they can kind of pick up the pace to catch up with their valuation here. All right, on the TipRanks side, not a lot of recent updates. All of these are 2 months ago. you're sitting in the 30s, 32, 36, 33. You even got a sell in there. The rest are holds. So I think with FSLY, you know, it's not a company I've studied super closely, but I think the next earnings report will be interesting. And probably the most important thing is, what is their roadmap of features for the future? And what is their roadmap of client growth for the future? Those two things are really going to need to be positive in order to turn this ship around. So if you follow tech closely, you follow FSLY closely, and you know that they have some strong client candidates in the sales pipeline, and or you know that their technology roadmap is getting better every day and they have some really cool features coming out, that's what I think it would take to really turn FSLY around. Otherwise, right now, even after the beating, I'm still not super intrigued by this one. All right, next up is Pinterest. And Pinterest is down year to date 23.58%. Let's take a look at their earnings growth. Phenomenal earnings growth projected this year. You know, it's only $1.06 a share, but it's 150% from the year before. And kudos to Pinterest for even being a social media company that makes profits outside of, you know, the big dogs. So they're doing some good things, and that EPS is projected to grow over the next few years. So this is a company that is building a business for profit. That's always important to think about for a long-term future. And then on the sales side, this is where things, in my opinion, have went a little wrong for Pinterest. And it's not even bad news, right? But this year, 55% growth rate, absolutely phenomenal job. Next year's not even bad at 30%, okay? And that could go up over time. And the out year is 33%. But what you're seeing is slowing growth or contracting growth. Nothing wrong with that. But Pinterest also has some user retention concerns as the behavior shifts out of the pandemic. More people are out and about, et cetera, et cetera. So there was some concern that their US engagement numbers were down. Acquisition in other countries was perhaps a little slower. If anything is going for Pinterest at this point, though, is that we are coming up on Q4 holiday shopping. If they can bang out a good Q4, which is basically digital advertisers' dream, then I can see the momentum for this one going back up. But I wouldn't say, even with the pullback, that it's wildly undervalued as I look at these metrics. All right, let's see what the TipRanks analysts think. And we have a couple fresh updates here, 25, 14, and 8 days ago. We've got 50s, 57, 58, and 68. All of those numbers are basically double-digit increases projected over the next 12 months. So analysts, I think right now, at least the freshest updates, they are positive for what Pinterest might be able to pull off in the fourth quarter. So I think the big risk for Pinterest right now, obviously, is going maybe flat in Q4 year over year, maybe going flat on user acquisition. And the worst case scenario is missing EPS and revenue targets. That would push Pinterest down, you know, a solid 10% in my opinion. And it's going to create a lot of questions for 2022. We've already seen consumer behavior change, and the expectation from the street is going to be that the consumer will continue to change away from Pinterest and social media as they get out and do other things. All right, next up is RingCentral. This is basically a virtual phone system that you can use for businesses, get your own business phone number, as well as like a Zoom equivalent they have built in there. But year to date, down 45%. So this one took a huge jump in the wrong direction. Let's take a look at where these earnings are projected. So fiscal year 2021, $1.29 on the EPS. That's 32% year over year. Gets you a forward PE in the 100s. And it doesn't look like next year, while they are going to grow that EPS another 28%, I'd argue that it might not be catching up fast enough with the stock price. So when we saw that 45% fall off, it's likely just a revaluation. It's not necessarily saying that this company isn't doing bigger and better things. Let's check out revenue. $1.5 billion this year, that would be plus 30%. And in a year coming off COVID, I'd say plus 30% for a virtual phone system is pretty good. Looking ahead to 2022, you got some growth contraction, plus 24%. We also see that in 2023, but nothing wrong with plus 24% growth. It seems maybe for RingCentral that their stock price had a lot more growth priced in, and all it's doing now is maybe just returning to a more affordable level. Let's see what the TipRanks analysts say for this one. And wow, you still have some strong, very strong projections here. 11 days ago through last month, then we have several from 2 months ago. Buys across the board, a lot of iterations of $400 in here. Frankly, I'm surprised by these projections. I'm not going to lie. Going back to the metrics we just looked at, I do see good growth with RingCentral, but I'd have to study it more to try to understand who or why these analysts think that this stock is going to go up to $400 over the next 12 months. Perhaps there's some acquisition talk in there. Maybe they have some new technology coming out. But if they don't, I would say it's going to be a struggle to hit these numbers, but we'll see how it goes. All right, last one on the list, OLED, Universal Display. These guys basically hold all the meaningful patents for OLED screens and lights. They also do a ton of the research with other corporations on how to incorporate OLED into enterprise and consumer applications. So it's basically like a patent sort of ownership rights play. It's a very interesting company. It's one I've thought about buying in the past, to be honest with you. Year to date, minus 28%. Let's take a look at the metrics to see maybe why this one fell so much. We go down to EPS, $4 in EPS projected for this year. 48% growth year over year, so that's not too bad. Put your forward PE at 39.87, probably the best of the numbers that we've seen on this board so far. December of 2022, inching up to 526. That brings your forward PE down to 31.32. So kind of sort of reasonable. The only thing I would say about this 31 is while in tech, that would be a very good number, let's just say for NVIDIA. This is a little bit different play. This is a patent owner rights play. So I'd have to study comps to really understand if this number is low or high. On the revenue side, $558 million projected this year, plus 30%. Price to sales coming down to $13.91. But you do have to go out to 2023 where they'd get, looks like a 17% increase. Before that, price to sales dips under 10. So just eyeballing this one, I'd have to do some more research, but I would probably want to start somewhere under 10 for this price to sales ratio, and I'd probably want to get under 30 on the forward PE. So with that being said, I'd be personally looking for a little bit lower price on this one. All right, on the TipRanks side of things, we have analysts who basically disagree with everything I just said, and that's okay. And that's why we do this, right? So 29 days ago, you got two analysts coming in at 270. This is a projection over the next 12 months. And 2 months ago, you did have one sell at 135, but you got a lot of 270s here, 275, 285. So the position right now, while we're a little out of date on these guys 2 months ago, the position right now is OLED will bounce back somewhere over the next 12 months. What you're going to want to study with this company, and I've already done it in the past. Granted, I haven't refreshed it in a while. You're looking for huge use cases of OLED, right? So whether it's the next wave of autonomous vehicles, you already have, TVs, you already have cell phones. What is the next breakthrough application? Maybe it's in healthcare, maybe it's freaking movie screens. I have no idea, but that's what you're going to want to study to understand, can they unlock royalties with another monster play somewhere? All right, investors, so those are 5 growth stocks that have really been hit hard this year. Kind of went through and gave you my thoughts on do they have a short-term recovery option, or should you just get greedy maybe in the next correction and wait for them to go down another 5 or 10%. And certainly anything's possible, particularly in this market. So I think whether you're looking at battered down stocks like we looked at today or proven winners, I would just preach patience as we get through the volatility that we're seeing here in September into October. All right, as always, please give a like, subscribe to the channel if you enjoyed this content. We'll see you on the next video.